Hi everyone, welcome to today's video. In this channel, from the beginning of this channel, we've always talked about what are stocks, how you can invest in stocks, and different types of industry analysis, different type of stock analysis, different type of opportunities which I've showed to you guys. But do you know how the stock market actually works? To understand how the stock market works, you should first know that what is a stock. A stock, also otherwise called as a share, is a representative or a fraction of any company. Basically, if Amazon had 1000 shares and if you own one share of the 1000 shares, you will be owner of Amazon by the equation of 1 is to 1000, right? In reality, companies like Amazon and alike have millions of stock, and that sums up what I told just now. And if you own a stock of any of these companies and their valuation, or so to say their worth, increases, which means even your stock price will increase. There is also something called as the preference share and the common share. The common share is the normal share which anyone can buy and usually which everyone buys, and the preference share is the shares of the same company, but the owners of this preference share will have a bit of preference when the company gives out dividends. Dividends is basically the split of a company's profits, and preference shareholders get preference when dividends are paid out, preference in all other kind of financial decisions. But the one drawback of this preference share is that they won't have voting rights, and the common shareholders will have voting rights. That is the election for board members or any financial decision, mergers, etc., to be made. The common stock owners will only vote for those situations, while the preference share owners cannot vote. Stocks can get way more complicated than what I just told, but this is just something that everyone should know. Second question is, why does companies sell their stock? The answer is pretty simple: to raise money. Because unlike the bank, what does the bank do? The bank looks at the company's assets and then give them a loan. But unlike the banks, the stock market does not look at the company's assets before people invest in it, but people, or the investors so to say, look at what it can be in the next 10 years, look at its potential growth, and then give the company money or invest in their stocks and buy their stocks. In this way, even small companies with small revenue, small profits, and small assets and liabilities can also raise a lot of money, more than their valuation itself. And for a company to sell its shares, it should issue a IPO, also known as the initial public offering. There is also something called as the follow-on public offering, which we don't have to know right now, but what we want to know right now is the initial public offering. What is initial public offering? When a company goes to any major exchange, stock exchange of their country, wants to get listed on the major stock exchange, then the company has to raise the IPO where people can come and buy shares. And once the company issues the IPO, the company goes from privately operated company to a publicly traded company. Now the third question could be, why does a company's share price fluctuate? Someday it's positive, someday it's negative, someday it goes up, some days it go down. Why is that? It is because in stock market there are millions and billions of investors, and each investor has different opinion, and the aggregate of these opinions are due to which the stock prices go up or down. If more people are buying, the stock price goes up. If more people are selling, the stock price goes down. As simple as that. For example, let's say you have a furniture and you go and list that furniture on, let's say, eBay for, let's say, 100 rupees. And if you listed that furniture for 100 rupees and on the first day you get 100 emails telling that they will buy the furniture right now, they'll come to your home and pick it up. So what you'll do, by seeing the 100 people who are willing to buy that furniture at 100 rupees, you will increase the initial price from 100 rupees to the maximum when there is only one buyer willing to buy this furniture at the highest price, let's say 250, 300 rupees. And the opposite can also be true. Let's say on the first day you got 0 emails telling that someone wants to buy your furniture. So the second day what you'll do is you'll reduce the price from 100 rupees to 90 rupees, right? This is how eBay works, and this is how exactly the stock market also works. And this is all you had to know about stock market, right? And this is how crazy simple it is to understand stock market. Now you people will probably tell me that, okay, why the hell should I invest in stock market when I get a lot of returns, let's say 5 to 6% in a bank FD? It is because stocks give you a lot more than what a bank FD gives you. Because most of the billionaires are either business owners or investors through the stock market. Right. The average return a average person can generate in a stock market just through investing in the index or the Nifty 50 or the top companies of the country is around 12 to 13%. So 12 to 13% is obviously made more than 3 to 4% which you'll earn in a bank FD. And the second reason why you should invest in a stock market is because of the inflation. Every year the inflation grows and the bank FD only gives you returns which is adjusted with the inflation, right? Which means in actual terms you're not even making any money in the bank FD. But on the other hand, if you invest in the stock market, you will not only beat the inflation, you'll also make extra money through the stock market. Now the last question is, how do I invest in the stock market? Now the last question is, how do I invest in the stock market? It is very easy. First, all you have to do is go to your bank provider and make your normal current account to a trading account, or so called as the demat account, and download any major trading app like Upstox, Zerodha, Angel Investing. There are so many trading apps in which you can trade publicly listed companies for almost free, right? It is very easy. But after this begins the hard part, where you have to decide which companies to invest in, which is a great buying time, which is a great selling time. And to answer all of these questions, there are a lot of videos on my channel. You can refer those videos to decide where you can invest, what are the buying opportunities right now, what is the good time to invest in which stock. Well, that's it for today. If you like the video, make sure you hit the like button. Thank you for watching and see you soon.